Hello, I'm Doug, a CPA with George & Company Business Consulting. When the legislation that's been referred to as the Big Beautiful Bill was being discussed, I often heard people say that, well, if this bill passes, there'll be no tax on Social Security. Well, unfortunately, this was a bit of an exaggeration. So I put together an example. Okay, so here's our example. See here on the screen, I've got three columns. 2024, this is before any changes. This is how this particular taxpayer would have looked in 2024. 2025 is after the changes that are supposed to reduce tax on Social Security, as well as the higher standard deduction and increase limits on what's available to deduct. For example, in this taxpayer's situation, their health savings account. And then the third column is all the provisions that are part of the Big Beautiful Bill related to tax as it affects this taxpayer, but it's also looking at it in terms of how it would look if it was true that there was really no tax on Social Security. So we need to remember that the third column here is not reality. This is what it would have looked at if it was accurate that there's no tax on Social Security. So the first thing we're going to look at here is the tax that this taxpayer had to pay in 2024. They paid $11,846. This was on taxable income net of the tax paid of $90,737.57. They would have had Social Security excluded from tax of $7,232.40. So 85% of their Social Security was taxed in this example. The standard deduction available to this taxpayer was $30,750. So they took the standard deduction you see here. And they had $25,650 of deductions to arrive at adjusted gross income. So these are things like traditional IRAs or health savings accounts. And moving on to 2025, so this is after the provisions of the Big Beautiful Bill and how it affects this taxpayer. So you see their taxes are lower. $980 lower. That's because they obviously would have had lower taxable income, $83,521. That's because more of their Social Security was excluded. So dark green there is the amount of Social Security that was excluded. And you remember the additional deduction for seniors was $6,000, but it phases out for higher income levels. So let's see how much of the $6,000 they were actually able to take. Do a little math here. So they was actually able to take $5,600 of the $6,000. So $400 was phased out in this example. And they took the standard deduction of $33,100. That's the new higher standard deduction that's available. And they had $25,900 in deductions to arrive at adjusted gross income. That's because there's some provisions that allow for a greater deduction for the health savings account. Okay, now that we've looked at the way this taxpayer looked in 2024 and we've applied the changes that occurred because of what's been referred to as the Big Beautiful Bill, Now let's look at how this taxpayer would have done if it was true that it wasn't an exaggeration and it really was no tax on Social Security. So remember, this example is how it would have been had there been no tax on Social Security, as was discussed while they were promoting this bill. So you see now this taxpayer would have had a little over $4,000 less in tax than what they really have to pay based on the changes that occurred because of the Big Beautiful Bill. And of course, this is because their taxable income net of tax is lower, $52,384. The reason that is because all of their Social Security in this example is excluded, $48,216. You see, in this example again, this is not what really happened. This is not what the bill really permits, but this is how it would have looked had it really been the case that Social Security was no longer going to be taxed. See, $48,216 is excluded. You can see they're taking the same standard deduction they took in the 2025 example. And they took the same deductions to arrive at adjusted gross income as in the 2025 example. So again, my point is not really to criticize the bill. There was some exaggeration. It really is not the case that there's no tax on Social Security. The reason for doing this and going through this example is I want taxpayers to understand, especially if they're about to retire, have retired, and they're planning and looking ahead, I want them to understand that there is going to be some tax on their Social Security, especially if they're higher income earners. The reality is that prior to this bill, this Big Beautiful Bill that said there'd be no tax on Social Security, I think I read somewhere the Council of Economic Advisors said that about 64% of Social Security recipients didn't pay any tax on their Social Security. Well, this bill raised it from about 65%. It raised it up to 88%. So that means 12% of taxpayers receiving Social Security will still have some tax on their Social Security. The reason I'm using a higher earner here is because it's true. Higher earners will more likely be taxed on a greater portion of their Social Security than a lower earner. But with the retirement planning that has come about over the last several years, there's a lot of taxpayers fall into this category because they'll have a lot of unearned income as part of their retirement income. So the point is, again, just to recap, the Big Beautiful Bill did not make Social Security tax exempt. I'm not criticizing the legislation in any way. There was many very good aspects of it, but my purpose again in running through this example is to make sure you're aware that the reality is far different than what was discussed when they were promoting the bill. The last thing I want you to do is make tax planning decisions based on misleading information. So remember that if you're a higher income person and you receive Social Security, it will likely still be taxed at some level. Questions about this, please comment below or reach out to me. Thank you.